Hi ladies, welcome back to my channel. So today I'm going to be sharing with you my trading 212 portfolio. This is basically the vehicle in which I used to do and carry out all of my investments. What you're looking at now is my investment portfolio. So as you can see, since I started investing a year ago, I have invested 10,098 euros, and as you can see, the return that I currently have, I'm currently sitting at a 9.6% return, which is pretty decent, I would say, for someone who didn't know a single thing about investing a year ago, to have not taken an L but a W. It's looking good, I would say. So that means a return of about 969 euros. Let's get into it. So the first stock that I currently have is this Amazon stock here. As you can see that I own 0.29 shares. The good thing with trading 212 is that you're able to buy fractional shares. So if you don't have like the full amount of money, as you can see, one Amazon stock actually costs $3,300. Like, yo, I don't have that kind of money just to put on one stock. That's too risky. So I basically bought like a fraction of the full share, which is 0.29. And still, that's like 800 euros that I've put in it over the past year. But yeah, as you can see, the stock is doing not amazingly. I'm up by 1%, which is a 12 euro upside. So not too bad. As long as it's in the green, then that's good. The next stock I obviously on is 5.6 shares, I would say, of Apple shares, and I really like this company and I think it's quite consistent. I'm up 18.5% here, which is pretty good. No complaints from me. And Apple is a really good company because it actually offers you dividends, so they pay me dividends. Make sure you subscribe because I'm going to make a video for you guys to show you how much dividends I've earned within my first year of investing, which is crazy. Again, BARA Developments is a company that I also bought because it's a company that is quite reputable. For those who don't know what they do, they are basically a construction. They build houses basically in the UK. It's a British company, and again, I managed to buy it quite early on last year when it was still relatively cheap, and now it's gone up. So with that, I've made a 21.15% upside here, which is always nice to see. We love to see that green. Again, another stock that I own and is doing pretty well is my BP stock. For those who know, they have several fuel stations in the UK and across the world. So I have 194 shares from BP, and I have an upside of 13% with them, which is pretty decent, I would say. Over to the next company, we've got Clean Energy Fuels. So I'm going to make a whole video on this stock, but basically for me, this is like a long-term hold. The very first time I actually bought this stock was when it was still $2 per share. I only bought one stock, and this is the biggest regret of my life because now I would be sitting in my dollars, honestly. But anyway, I ended up like putting quite a lot more money into it. As you can see now, I've got 69 shares from this Clean Energy Fuels, but it has gone down since I got it. My average share price is currently at $9.67, which is not lovely. It's quite high, but I'm continuing to invest in it because it's good to bring my average down. And if what I'm saying doesn't make sense to you girls, don't worry, there's going to be a video coming out to explain every single thing that I'm saying here. But let's continue. So here we've got I've got Fidelity European Trust. So this is an ETF. Again, I will describe that in an upcoming video, what all of that means. And for this stock, we have an upside of about 15%, so doing quite well. I have 131 shares with them, and they do also pay dividends, which we like to have. Moving on to the iShares Core FTSE 100 stock. So these are the top 100 companies in the UK. I have 68.4 shares here with an upside of 8% over the past year, which is okay, pretty decent, I would say. So for me, I try not to be too greedy here. As long as I'm up, I have an upside and and it's not red like Clean Energy Fuels, I'm a happy girl, you know, because that means we're not losing money. So So moving on, I also have this iShares Global Clean Energy ETF, which is basically a collection of companies within the clean energy sector. And again, here I've got 27 shares and an upside of about 1%. So doing well, but not amazingly. I would say it's pretty okay. I'm not losing money, so I won't complain too much. Moving on to my fairly recent buy. So here we have Caring. So Caring are actually this is a stock that actually owns, from the company that actually owns Saint Laurent, Gucci, Bottega Veneta, Alexandra McQueen, Balenciaga, a lot of different high-end luxury companies, I would say. So basically, when you own the stock, you own Gucci, you own a share of Bottega Veneta, you own Saint Laurent. So that means whenever someone is buying a handbag from Saint Laurent, that's a good thing, because you're also going to get some dividends. You're benefiting as well. And as a person who does like nice things, and I do like luxury items, we're going to get into it, girls. There's so much to learn and so much to talk about here. But I decided, since I'm going to be like buying from these brands, they better be making me money in turn. So that's why I decided to start investing in them. I actually have been investing in them for about 2 months now, because I realized something really critical, which I'm going to be sharing with you guys in another video very soon. Moving on, so we've got LVMH. So again, this is the stock where from the company that actually owns Louis Vuitton, and again also includes several other wines and spirits luxury group of companies. So again, when you own this stock, you own Louis Vuitton. You own a share of Louis Vuitton. So I was like, you know what? If I'm going to be giving them my money, they better be giving me back some dividends as well. So that's why I ended up buying some stocks from them, and it's been doing quite well, as you can see, up 5%. And I've only had this stock for about 2 months. So really happy with this stock, and I'll make a video about all of this again in the next coming video. So make sure you subscribe, make sure you like this video, let me know that you like this content. Moving on to Realty Income, I like this stock because they give you monthly dividends. So every month I'm getting paid, girls, from this company. Right now I've got 5 shares from them, and I'm up 9.29%, which is awesome. And of course, Tesla. I have a love-hate relationship with this stock, because sometimes it's doing really well, which it is now, which is up 7%. But then sometimes it's not doing so great. But now it's doing well, so I won't complain. Let's move on. Moving on, I've got 3 more stocks left. So here we've got the Vanguard FTSE All World High Dividend. So this is basically an ETF which tracks all the top companies in the world, and they pay you a very high dividend, which I'm not too sure, if I'm honest, at the moment. I just got this stock as well quite recently, so let's see how it goes. It's been doing pretty okay, I would say. I'm up 1%, and I've been holding this stock for, I don't know, about 2 months as well. So not bad. As long as it's not red, as I said, we're not taking L's, we're taking wins. And then my favorite stock, which I would say I'm willing to put most of my money on this stock, basically. So this is the Vanguard SP 500 ETF, which is basically a compilation of all the top 500 companies in the US. And this is a great stock because it has a history of doing well. And I'm gonna have another video for you girls explaining what all the words that I've been using, all the jargon I've been using in this video. But today is just an initial introduction for you girls, just to get you started. So as you can see here, I've put pretty much a good amount of my money into this stock. So I have 62.6 shares from here, and I'm up 16.73% over the past year. So that's pretty much an upside of about 642 euros, which I'm not complaining. This is a very stable ETF, and they have also paid me some dividends, which I'll share with you in my next upcoming video. And then we have this stock, girls, that is my biggest regret, and I'm pretty much waiting for it to improve so that I can sell it off. So this stock is pretty much a write-off in my eyes. So yeah, I wouldn't buy it again. But yeah, that's pretty much where I am at the moment in terms of my investment portfolio. So far, I'm investing 500 euros every month and pretty much share this money between all of my stocks except for the last one, which I just shared with you. And yeah, that's pretty much it. I hope you girls enjoyed this, and I'll see you in my next video.